For our interview this month, I'm joined by Peter Rayney, who is a very well-known tax consultant, also is chair of the technical committee of the tax faculty of the ICAW, a person in a position who can tell us all sorts of wonderful things about a whole range of different taxes. The one we have chosen to look at today is an area that an awful lot of people nod at without really knowing two things actually, whether they need to know any more about it and also what there is to know, and that's stamp duty land tax. Peter, thank you very much for joining us today.
Pleasure.
There's two, we tend to focus on residential. Commercial I mean, they're very similar, but they're very different rates. Let's start with residential. Client turns up and is looking at a buy-to-let property, something like that. The 3% is currently the big talking point, but what else do we need to watch out for?
Well, the 3% is the key point because actually anybody who's doing a buy-to-let will already, one would assume, have their own residence at the moment, and therefore this 3% additional rate will apply to anybody on a second plus purchase of a residential property. And the other thing we should also make very clear is if you buy any property through a company, it doesn't matter whether it's a first purchase or whatever, any corporate purchase of a residential property will still be liable for the 3%.
Okay,
we don't have this concept of a main residence, obviously, in a company.
Because we also have so many different elements of tax within that, haven't we? We've got this enveloped everything.
Yes.
But as well as the various charges there and annual charges and all sorts of things, the 3% is definitely going to happen in a company.
Absolutely, absolutely.
Okay.
Yeah. And we come across this when we incorporate people, who actually got residential property letting businesses. When we're working out what the SDLT costs could be, clearly it's 3% across the board, across the board effectively.
Okay. A lot of people have said that with the changes to deductibility of interest as far as rent is concerned, as soon as that announcement was made, everybody was saying, well, clearly I'm going to incorporate, I'll get incorporation relief, there'll be no SDLT, let's do both of those. Incorporation relief, there probably won't be any.
Well, this is an interesting point because the Ramsey case a few years ago basically highlighted that now to be a property business, this is quite a low benchmark. And generally speaking, if somebody's actually working a substantial amount of time in their property business doing things maybe above what a passive landlord might do, then we will get incorporation relief under 162, and therefore we would expect to get our rollover against the share-based cost. A couple of points though, with the reduction in CGT rate to 20%, if we're looking at commercial property businesses which are incorporating, don't just blindly assume that we will go to incorporation relief, because there may now still become an opportunity to just suffer tax at 20% and build up a loan account. That'll still give you quite a good extraction rate. But of course you can't do that with residential property, so you're still down 28%.
28%, okay. Yeah. So, and then as well as that, we have this stamp duty land tax charge on the incorporation of our buy-to-let business.
Yeah, I mean, some people obviously just feel that under SDLT is a general concept that if you transfer property for no consideration, i.e. gift property, then you might avoid a charge. But and that is a general principle of SDLT, that you need consideration upon which to levy SDLT. And one of the overlooked areas, of course, is if you assign debt, like hidden, so you transfer property subject to a mortgage, then that assumption of the debt would be consideration for SDLT. Now, because of the HMRC paranoia about enveloping, we find that when you transfer property into a connected company, which is what HMRC don't really like you doing, but hey-ho, there is a market value rule. So if you transfer property to a company with which you are connected in the sort of corporation tax scheme of the definition, then there's a deemed market value transfer. So you can't wriggle out of the SDLT charge by simply saying, well, I'll transfer the property for £1 or whatever. There's a market value rule that applies.
And is that just for an individual transferring into a company?
Yes, for a sole trader property business owner. Okay. But if you are a partnership or an LLP, there's a different regime that you have to follow, which is Schedule 15 FA 2003. Yes, there is an overlap between the deemed market value rules. It's not an exemption as such. Some people miscalculate that it's an exemption. It's basically a way of calculating the chargeable consideration.
Although it might sound obvious that there's two types of partnership, there's a business partnership, as we've just discussed, and a family partnership.
Yeah.
Actually, we might not be a partnership at all, I think.
Yes. So, I mean, some people actually sometimes misunderstand the fact that to be within the beneficial Schedule 15 partnership provisions, you do have to be a legal partnership, and that, of course, would include an LLP. And therefore, if you haven't got that partnership framework, i.e. a partnership agreement, a partnership bank account, people being held out as partners, all those sort of badges of partnership, then HMRC will properly say, well, this is not a partnership, it's co-ownership, and therefore you will not be entitled to the Schedule 15 relief, and you'll be back to the market value rule.
Right.
Yeah.
So and presumably with families, that's quite common, where people just
yes,
have
exactly, an informal co-ownership really, and they think that conceptually that sounds like a partnership, but legally it's not a partnership.
Okay.
And that's where HMRC, if they kick the tyres on the structure, they can actually say, well, you're not entitled to the relief, and therefore you will have an SDLT cost.
Right, okay.
Yeah.
So it really does require an awful lot of thinking about before you get to any purchases at all. In terms of how you're structured and what you're thinking about there.
Yeah. I mean, the other thing we have to maybe stress is that I sometimes get people saying, well, we're a sole trader, very easy to bring my wife in, and then we can have a little while as a partnership and then go into a company to use the SDLT partnership provisions. I think you'll find that revenue in that case will use Section 75A, which is like the mini GAR for SDLT. So if you've inserted a step which has got a tax avoidance or SDLT avoidance purpose, what 75A allows revenue to do is to ignore it, and therefore the transaction will be sole trader effectively to company, and therefore SDLT based on market value. But of course, if there is sufficient, and you need to allow a long period of time before you can probably minimise your chance of an attack under 75A. And therefore, in practice, I would say that if you come for advice and you've got a formal partnership which has been going for a number of years, and you file partnership tax returns, then you should have a good chance of actually establishing relief. If you say to me, well, I'm a sole trader, I want to be a partnership for a temporary period, and then I think you'll have a problem, and I wouldn't recommend that.
And it's the stepped approach, isn't it? That's when you've got the problem.
Yeah, I think so, yeah.
Okay. Going back to when I learned stamp duty rather than stamp duty land tax, the transition was explained to me rather beautifully in about 2 sentences, which was, it's like stamp duty, but all the things we used to do to get around never paying it, you can't do anymore.
Correct.
So things like not quite completing and things like that, you still hear stories of things similar to that happening?
No, the SDLT legislation has bedded that down, because actually, yes, completion will be one of the steps, but there's also a concept of substantial performance. So basically, if you paid most of the consideration, for example, on a land contract, you've actually triggered your SDLT charge. You don't necessarily have to complete, obviously you will, but substantial performance, if that comes first, will be your triggering event for SDLT.
Okay, so obviously I hope people are starting to appreciate some of the complexities, particularly with the incorporation of SDLT. Yeah. Where can we plan with SDLT, and where do we just have to say, this is what we're going to do, the SDLT will happen? When can we plan with it? Well,
I think you need to take, especially on the incorporation side, I think planning is actually a medium-term planning solution, because if you do want to ultimately put your property into a company, then you will have to become a partnership or an LLP. I think LLP is probably more certain, of course, because there's a legal framework for an LLP, which is fairly more certain. But in terms of transactions, it tends to be very fact-dependent on what you can do there. Sometimes, actually, there's nothing you can do, but you need to look at transactions well in advance, because, of course, Section 75A is there in the background, and also having a thorough knowledge of SDLT relief. So today we've just talked about incorporation, where there's funnily enough, no standard SDLT relief, whereas in the corporate sector, we have a number of reliefs for reconstructions, where you break up groups and put properties into 2 separate companies on a demerger. There's a lot of reliefs there, and in that sector, you need to be very careful to ensure that you actually tick all the relevant conditions. So yes, there are things you can do, but a lot of it is actually acknowledging that there's quite a lot of rules out there.
Okay, yeah. And so whilst it's something we're not going to just leave to the lawyers to deal with, when our client comes to us with a business plan or an idea of restructuring, or perhaps the advisor has come up with an idea, is that when they speak to somebody like you and say, So where are we on SDLT?
Yeah. Or is there anything we can do? Because that's a question that often get asked.
And so when you're coming across mistakes, if you like, that people have already made, what mistakes do people tend to make in SDLT?
Basically not reporting some transactions, and actually even on the incorporation thing, I have, through experience, had to go back and actually fight with HMRC because, and this is a quite important practical problem, is that the SDLT return form does not have any white space. So when you come to do things like the partnership incorporation, some lawyers actually have done, if they're discharged with doing the SDLT return form, they might put in box 9 for the relief, they might claim reconstruction relief. Well, actually, it's not reconstruction relief. And the way the form is, so because it's got no white space, you can't explain to HMRC what's going on. Because in the consideration box, you actually have to put something there, otherwise the form can't be filed online because the computer will say no, effectively. So, and because HMRC don't understand what's going on, there can be inquiries. And I've actually had to deal with a number of inquiries to actually ensure that we do get the relief at the end of the day by explaining it to HMRC what's going on here. And best practice with SDLT is actually to do your form in the normal way, but at the same time write a disclosure letter separately to Birmingham Stamp Office to show what the facts are, how you calculate your SLP percentage, and actually then work through the formula, and then tie that up with your SDLT return form, because every SDLT return's got a unique transaction reference number, which you'll put on your letter, and that will protect you from discovery. Because one of the problems you have, if you've got no white space, HMRC will always say to you, well, we didn't understand the transaction, so we can go back 4 years on these things. So there is that compliance side, which is quite an important part of getting absolutely right.
So I think what you're saying is you have to make your own white space effectively.
Yes, effectively.
And write to Birmingham and say, these are the issues we face and this is why we've done it.
Yeah.
Okay. And what else do you come across when people are contacting you? Is it that they're about to do things? I imagine there's an awful lot where this has just happened.
Yeah.
Now what can I do?
No, a lot of people, there seems to be a lot of word on the grapevine that you can suddenly avoid SDLT by becoming a partnership. Well, we've dealt with the problems that you get with that. But quite often I get asked to help them through because it's the first one they've done or the second one they've done. They don't feel confident. But by and large, it's hand-holding people through the transactions and maybe including doing the SDLT reporting. Which is important part of that.
People, I think after this interview, will be getting in touch with you to lead them through perhaps the SDLT mire, which they might otherwise find themselves in.
Oh, thank you.
Peter Rayney, thank you very much indeed. Now it's time for Admin Minute.